Hey, GrowWire listeners, thanks for tuning into this GrowWire podcast. I'm your host, Jason Maynard, and on this episode, we have the one and only Ron Gill. Ron's a venture capitalist with Lead Edge Capital, former CFO of NetSuite, and board member at HubSpot and Duo. Ron talks to us all about scaling a business, pitfalls of growing really fast, and the things you have to do to get to the other side. I think you're really going to like and learn a lot from our chat with Ron. We might even throw in a little bit about a Chinese chicken salad. Who knows?
You're listening to the GrowWire podcast, a place where you'll learn the ins and outs of growing a business, running a business, or even taking your big idea, career, or personal development to the next level. It's all possible. Our host, Jason Maynard, the SVP of Marketing at Oracle NetSuite and the Editor-in-Chief of GrowWire.com, will take you on an exploration of growth through candid conversations with some of the most brilliant minds in entrepreneurship, entertainment, business development, and more. Whatever your goal, we know you'll walk away with the right tools to help fuel your own journey of growth.
Before we dive into this episode with Ron Gill, here's a word from our sponsor at The Second City. All right, folks, here's a little business insight that's almost too good to be true. Learning works best when you're laughing. Second City Works, the B2B side of comedy mecca, The Second City, unleashes the improv methods pioneered on their world-famous stages to help companies and individuals improve performance. Their professional development programs unlock better ways to communicate, collaborate, and innovate, all while laughing till you learn. Visit secondcityworks.com to find out more. That's secondcityworks.com. Also, make sure you head over to growwire.com. That's right, our site for the latest episode of the GrowWire Show featuring Toad & Co. Toad is a sustainable clothing company focused on the planet, people, and profit. Not only do they utilize eco-friendly materials, clean manufacturing, and reusable shipping, they also employ people with disabilities. It's a really amazing story, just in time for the International Day of Disabled Persons. You're going to really be impressed with what these guys are doing. Check it out on growwire.com. Welcome to the GrowWire podcast. I'm your host, Jason Maynard, and I have a really special guest in the studio today. My good friend and operating partner at Lead Edge Capital, Mr. Ron Gill. Ron, welcome.
Good morning. Thanks for having me.
Yeah, it's great to have you here. You've had quite a storied career in the tech business, and you're now a VC. And we'll talk about that.
Sort of, yes.
Sort of a VC.
All right.
Allegedly.
Right.
Allegedly. So, Ron, let's jump in a little bit. And for those of you who may or may not know, Ron was CFO of NetSuite, worked at Hyperion, SAP, big-time Silicon Valley chief financial officer. You're on the board of HubSpot and Duo Security, two hot companies as well. But I want to dive in a little bit to get a little more background on you, because your story is quite interesting. So, where'd you grow up? How'd you get here?
That's funny. It's an unusual path, I guess, because I grew up in a small town in southern Texas. It's certainly I certainly didn't grow up steeped in tech companies or Silicon Valley. I grew up in LaGrange, Texas. LaGrange, yeah, actually famous for something else that we don't need to go into here. Yes,
the ZZ Top song,
ZZ Top
there
fame,
you go.
Exactly.
Yeah.
Look that up, kids. But anyway, small town, about as far away geographically and culturally from here as you can get, probably. But that's where I grew up, and I lived, all of my early years in Texas. My early influence in business is probably, my family. It was a small town. My father started his first company, I think, when I was 6 years old. So he was probably my first influence in business. And the whole time I was in elementary school and then high school, he was being an entrepreneur with all the struggles to find the product that fit the market and hire the right people and figure out how to fund the business to scale it up. And eventually he was quite successful.
What kind of business?
The consulting business that grew out of his early training, which he was a Baptist preacher, unusually a Baptist preacher in LaGrange, Texas. Again, long story that we don't need to go into now. But he was building that business as I was growing up, and so all the struggles of the entrepreneur, I guess, were there on display at home, and so that was probably my early influence. Yeah,
that's interesting. So who had a major influence on you when you were growing up? I assume Your folks had a big role in this, and
yeah, that was. I mean, it was a very small town.
How many people?
And I think today there's probably 4,000 people in LaGrange, Texas.
Oh my gosh!
Yeah, and I think that's probably about what it was in the 1960s when I was
the
growing
cows,
up there.
assume,
yes,
right?
I think that's. It may include a cow or two.
Okay.
Yes.
I assume there are a lot of cows in Texas, but I don't know.
A
few,
yes,
maybe?
Yeah,
Okay.
there are. Yeah.
Cowboys? I don't know.
Yes.
So you went to University of Texas?
No, I went to. It's funny. I went to Baylor.
Oh, you went to Baylor. Okay.
It's funny. So that's a good indication. So
Yeah.
even as late as college, I'm a less than 2 hour drive from my place of birth there, right? And it's interesting because somehow from there, so I grew up in this tiny town. I even go to college very nearby, and somehow from there, I don't know if there was something in the water at my house, but my sister ended up in London writing for the Wall Street Journal. I ended up spending a decade in Japan and some time in Europe as well. I don't know why we ended up so far flung, but
what did you study in college?
I studied economics and finance in college, and so it's funny because I came out of undergraduate school. I graduated in 1988, and the interesting thing that was happening in the world at that time was that for the last few years leading up to then, Japan was more and more on the minds of everybody. I think the trade deficit with Japan had quintupled in the 4 years before that. There was an episode in 1987 where senators were smashing Toshiba stereos on the steps of the Capitol building in Washington because of trade wars with Japan. So everybody was thinking about Japan a lot. And then in I think the year I graduated, 1988, the New York Times published a story that showed the top 10 largest banks in the world by assets, and 10 of 10 were Japanese banks. And graduating with a degree in finance and economics, I thought, it seems like I better learn me some Japanese. And so I went to Japan. I spent a couple of years in grad school in Japan. I did an internship at a Sony factory site in the middle of the countryside. It was great. It was great immersion for speaking Japanese and working in Japanese.
And are you fluent in Japanese?
I think you could have, 20 years ago when I was living and working in Japan, you could have said I was fluent. I don't think you would say so today. I don't use
conversational.
I don't use it as much as I used to. Yeah.
What's it like being an American from Texas, working then in the countryside or rural Japan? That's got to be a little different.
Yeah, it was different then, and this is that would have been like I said in the late 80s, early 90s that I was working there, and it would be very different today. So at that time, to be an American in Japan was much more exotic than it would be today, and it was unusual. But it was a great place to be a foreigner studying the language, and people were super generous with even when your Japanese was terrible, people would speak to you in Japanese, and it was very encouraging environment for that. And certainly the Sony was a fantastic environment because it was just every meeting, every email, everything you do is in Japanese all day, and so it was a great immersion for that. University was sort of the same, and so it was great for sort of building that foundation. I don't use it very much anymore, and I think if you looked at the list of the top 10 banks in the world today, maybe one of them by assets is Japanese. So the world didn't turn in the direction everybody thought that it was going to turn at that time, but it was still a great experience for me, and it was a great start of my career working there. What
was one of the biggest lessons you learned early in your career?
It's funny, my first job in Japan. Well, so what happens? I finished graduate school. I came back. I went to work for Sony. I'd interned with them. I went to work for Sony in New York, in the Treasury Department there, and got a bunch of really interesting big financing projects as my first couple of things to do there. So that was fascinating. I was very happy. They ended up sending me back to Japan to sort of headquarters in Japan, and I ended up moving from Sony to SAP, and I can tell that story if we're interested. But the couple of things that I probably learned at that phase. The first one maybe was really the benefit of asking the stupid question. It's nice when you're young and you're new at a company, you have a freedom to ask stupid. You're not supposed to know anything.
I still
right?
try and ask the dumb questions, even in my
it's
my
really a
advanced
skill
age.
I've honed over the years, the ability to ask the idiot question. But you've got a freedom to do it when you're new, and it's amazing to me how often the quote unquote stupid question really reveals either how what we all thought we knew is not actually the thing that we all thought we knew, or people talk about the danger of groupthink when a group's been working together for a long time. And I think there's also a danger of the opposite, which is groups been working together for a long time. Now we all assume we're all on the same page all the time. And sometimes the naive person in the room asking the stupid question will reveal that we actually weren't all thinking the same thing. Oh, I thought we were both thinking X. No, now that we have to articulate it out loud, we realize it's different. So that was probably the first thing I learned. And then, like I said, I moved from Sony to SAP, and that was very interesting. That's really SAP in Japan at the time was the first place where I really learned what we would call fast fail today, and at the time it was just kind of an agility. Where if we had a problem at SAP in those days, it was really take 3 people, go in a meeting room, whiteboard something, implement it the next morning, 3 days later, see if it's working and if you needed to fix it. And that was so much fun. That's really where I learned how much fun it could be to be solving problems in a business environment. And the difference between Sony and SAP was pretty remarkable in that respect. And some of that was Japan culture versus German culture. Some of that's hardware culture versus software culture. Some of that's massively large company versus only very large company, and some of it's just company culture that the company just moved faster, and so that was a lot of fun, and I think that's something that I look for now to make sure that I have that I'm working at some place that's interested in changing and growing and modifying as the story unfolds.
Was Sony interested in changing back in the day, or did they think they had it all figured out?
Sony was a really big, really comfortable company in those days. And this is again the late '80s, and so you've got
we all had Walkmans. Right?
Everybody thinks that things are going to unfold so that Japanese companies really rule the world. Sony televisions are the best televisions in the world. They sell at a significant premium to other televisions that look very similar. As you said, everybody's got a Walkman. Yep. They're really on top of the world, and I think there's some complacency that comes with that, and also just with being a whatever they were at the time, 200,000 employee company or something. It can be hard to turn a ship like that, and so I think it was those factors and SAP was still a little bit in scrappy mode. Maybe I'll talk about that transition. It's at Sony we're using. You can imagine I'm using a lot of financial systems at Sony, and we were on McCormick and Dodge, which was a mainframe based. Imagine a green screen terminal over in the corner. Yeah. That's the sort of accounting system we want. It was a little bit aged even at that time, I believe. But I had heard about this company that was doing this client-server architecture, people actually using PCs to interact with the financial system. It's remarkable. And so that's what got me interested in SAP and moving over there. And it was really that architectural change really ushered in this era of 3-letter acronym client-server systems that was that generation, ERP and CRM and supply chain management, all
early to mid-'90s revolution, obliterate your business processes and automate with new technology.
And so that's what got me to move to SAP. So SAP was I think R3 was introduced in 1992-ish, and so they're really in the scaling stage of that, and so that rapid growth also can necessitate some agility as well, and that also makes me think of the third thing you asked me about, the lessons. I think one of the other early lessons that I learned which I still make a lot of use of today, is just how important it is to realize that the things that got you to where you are today may not necessarily be the things that are going to carry you over the next for the next several years. And I think it's something that great companies pay a lot of attention to. I think it's something that tech companies do very well from the product point of view. Most tech companies will be very much thinking about the product they currently have in the market now, how much runway there is in that product, what's the next product we have in the queue, and what's the skunk works happening right now that we think is 3 products from now that could be a market. I think tech companies do a very good job of horizoning in that way. But there's a potential really to do it across the whole company, and it's often other aspects of the company that are going to also need to re-horizon or may not function at the next scale. And I think I give one example that we used to do at NetSuite is, we would, even as the product team is doing the product horizoning, I used to run a regression analysis on the LTV to CAC model. So it's the sort of essential, how effective are we at generating value from our spend model, and sort of see what the drivers have been. And there were times, if you had looked at that model in 2011 or 12, so 3 or 4 years post the massive downturn that was 2008, 2009, past that, as we're coming out of that recession, if you had said, gee, what's been the driver for the last couple of years that's really helped us improve the economics of the business? And you would have seen improving retention, because retention had been especially hit by the recession and had really improved for several years in a row, and that had been a big driver of improving economics in the company. You would have also seen that you're almost out of runway on that. Once the gross retention is 98% and net retention is well over 100, it just doesn't have any room to improve much further. Yeah. So the metric that's been driving your improvement is not going to be the metric that drives your improvement for the next 5 years. And if you had looked at what happened at NetSuite after that, then deal size started to really improve. The product became much more fully featured. Deals began to get much bigger, and that became a driver of economics of next year. But by doing this analysis constantly, we could sort of be aware of which aspects of the business still have runway in them, which aspects of the business are going to stop delivering incremental value, and we need to look elsewhere. And that's a sort of methodology that I still employ a lot.
I'm curious to get your perspective on the people side of this equation, because one of the things that I've always talked about in my own travels is like the people that get you from one stage of growth to the next stage of growth sometimes are different, right? The playbook has to be different.
That's right.
That you're talking about is you got to understand how you got to horizon and change your playbook. The question is, can people always make that change? Or do you need to, if you're a startup, your first 10 customers, the person who gets you that may not be the one who's running the company if they're 100 million in sales. So how do you manage the people side of that as you go through these changes?
I think you're right. And I think it probably isn't what I would call scale. Silicon Valley does a pretty good job of really stretching people, and we grow a lot of product people into great CEOs, for example. And so I think these fast growing companies can do a lot to unlock potential in people, and maybe grow them beyond where you originally thought they would. I think the inflection points that you're talking about often come with something that I wouldn't think of as scale necessarily as really inflection points in business. When we talk about scale, from my point of view, we're really talking about, I've found something that works. I need to do it 1,000 times more. Yeah. There are lots of things that have to happen before scale. You've got to have product market fit. You've got to figure out your go-to-market, figure out your selling motion, make sure that works. How are we going to support customers? You got to figure out these basic things before you say, okay, now we can hit the accelerator and really ramp these things up. And it's often that you can really be scaling a couple of those, and a couple of them are not ready to scale. We really got to rethink this one. It's usually at those rethink points that you run out of runway on a person. Maybe you've got somebody maybe you've been focused on small business, or you've been focused on transactional business, and you've really scaled that massively. Now you need to change the selling motion to a much more customer-facing, engaged motion. Yeah. And maybe that's a different discipline. Maybe that's a different person. Maybe you've been handling support in a certain way that's been very manual. Maybe you've been had people answering every call and addressing every customer issue, and now it's time you need to scale that. And scaling it means knowledge base and online help, and they're a very different discipline. And maybe that's an inflection point where you need a different person. I don't necessarily think the difference between 10 million in sales and 100 million in sales is necessarily
the only
a different person. It's how much can we just scale what we're doing, and how much do we need to really change what we're doing and do something different, and that might be a place for a different person.
Yeah. This episode was brought to you by our friends over at Blue Microphones. The holidays are right around the corner, and what's better than giving the gift of storytelling? Everyone has a story to tell, and Blue Mics is known for their iconic Yeti microphone, which has helped millions and millions of people find and amplify their voices to tell their story. So if you or someone on your holiday gift list is thinking about creating a podcast, check out Blue's new Yeti Caster, the complete mic and boom arm system ready to connect to your laptop, bringing the ultimate broadcast studio setup to your home or office. That's what we use right here at the GrowWire Studios, and we are thrilled. Bring that same cheer to your loved ones this holiday season. Visit bluedesigns.com and use the special code PODCAST, that's right, PODCAST, at checkout for a very GrowWire-y price.
Let's go in a little bit on your transition to NetSuite, because you'd worked at SAP and Hyperion, and you'd kind of lived the client-server software world. But you joined NetSuite really early in the movement to the cloud, and back then it was on demand. What did you see in terms of this? Not just in terms of the joining the company, but just broader going on in the industry. Like, how'd you get comfort doing that?
It's funny because there's a real parallel to my move to SAP, because SAP is at the very front end of client server. It's an architecture change. Yeah. The interesting thing was that client server was an architecture change, not a business model change. Mainframe software had been license and maintenance. Now client server is license and maintenance, exactly the same business model, just a change in the technical architecture behind the product. And the interesting thing is that McCormick and Dodge sold, and basically nobody else in the mainframe financial applications world made it across to client server. Yeah. And so it was a true inflection point. And arguably that transition was easier because it was just a technical change and business model stayed the same. You could be a public company on license and maintenance and deliver a new product with a different architecture. Yeah. Really hard to change business models on the fly. And so I was at Hyperion. We had been acquired by Oracle, and so I was on the transition team there, but knew I needed to be looking around for something else to do. And Salesforce has been public maybe for 2 years at that point. It's 2007-ish, and we had started to run into Salesforce when I was at SAP. Yep. And started to believe that it was going to be a real thing. The cloud's going to be a real thing. I probably didn't even say cloud at the time. We said the World Wide Web or something. Yeah. I don't know. But
on-demand computing or something like that.
Started to believe that actually people were going to actually entrust some critical data to other people's servers. That was the fundamental issue at the time. And so I started looking around, at companies. I was still, I had the good fortune as a finance guy to work at SAP, and then at Hyperion, and then at Oracle. And all these companies are companies that made product for my people, right? These are companies that make product that sells to CFOs and gets used by finance team. And that makes for a much more fun experience as a finance guy. You have much more interesting conversations with the product team, with sales team, with customers, when it's your type product that's being sold. So that was a lot of fun. And so if I could find that again, I wanted to find that again. And I was convinced that the architecture change was going to happen. So NetSuite was a natural. And while I was sitting trying to figure out how I could find my way into NetSuite, somebody called from NetSuite, and I got lucky. Oh, wow. A recruiter called, and so I went to NetSuite. And you're right, I went in 2007. So the company had done $67 million in sales the year before, so it was not a startup. They're in scaling mode. They've clearly got a product that people want, and they're just going faster and faster. And the company, and I joined as we were getting ready to IPO, and so it was interesting at the time. There weren't a lot of SaaS companies in the world. I think so. Salesforce was public. I think SuccessFactors went public around the same time we did. We went public end of 2007. And it was definitely a learning experience for everybody. What's the right way to measure this business? What are the right metrics to share externally? How do I educate the street on this business? It's very different. It's interesting. People think of course, well, the revenue recognition is different, but it really affects the model. Really affects the rhythm of the company, the way the quarter works, what you should be focused on when, how to redirect people's focus from. The revenue number is fantastic this quarter. Yes, but what happened in bookings? You got to make sure you're focused on the right thing. And that was an education process, like I said, for us internally, for the street, for investors, even board discussions. Sometimes you have the silly discussion where it's the second week of the third month of the quarter, and somebody on the board says, "Gosh, is there any way we could get that revenue number, a couple of million higher?" And you're like, barring a time machine or something illegal, no, there's no way to get that. Yeah, we need to go back a couple of quarters and book more business. Yeah. And so, it's funny because today, that would be like falling off a log for anybody in this world because almost every software company started in the last several years is, if not a true SaaS company, at least a subscription business model has become very very popular. But it wasn't true at that time. We were really in the early stages and figuring out a lot of it as we went along.
When you look at that journey over the years, what were the one or two things that if you were going to pass on the advice to other entrepreneurs scaling their business that you really learned? You mentioned the one thing about the kind of understanding the horizons of growth, but
yeah, understanding the horizons of growth certainly, and keeping an eye on that. I was very fortunate in joining NetSuite. I had so Jim McGeever was the guy who hired me in. He was CFO there before, now running the business inside Oracle. But between Jim and Zach and Evan, the founder of the company, they had figured out a lot of this stuff. Yeah. And I was very lucky to come into that group and gel with that team. So that was the place where I really got lucky. There's a couple of things, and I think you mentioned that I'm on the board at HubSpot and I'm on the board at Duo. So one's a fairly scaled sort of 500 million revenue public company, public for several years
HubSpot.
now. HubSpot, yeah, HubSpot. Sorry, and the other's Duo. So and Duo is sort of late stage venture, and they both have a couple of things in common that I look for and that I really enjoy working with, and I think help make them successful. The first one is both of those companies. It'll sound silly when I say it. Both of those companies set out from the beginning to build a business, and and don't get me wrong, they are both product companies. They both set out to build product, to delight their customers, to solve real problems.
Everyone loves HubSpot.
And make their customers super happy. And they do those things. Yeah. But they also started out from the beginning knowing what their business model was and how they would make money. It doesn't mean that they're focused on making money from day one. They're certainly focused on building the customers and making customers happy first. But they knew how they were going to do it. And it's remarkable. In Silicon Valley, we get a lot of product-oriented companies, which is great, some of which are so product-oriented that they punt on business model until very late stage, sometimes even until after they're public. They're still trying to figure out business model. And if you set out to build just the product and are overly enamored of just how cool the product is and don't give any thought to how you build the business, you may find when it's time to make this thing into a business, I really wish we'd architected this differently. Because now the business model could be supported by the product slightly better if we'd done a few things different. It's great to have that in mind. So even as Duo and HubSpot are both very product-oriented companies and very customer-centric companies, they're also both 80+% gross margin companies. The product's been architected in a way to deliver its value efficiently, and they were building a business from the beginning. I think the second thing that I would
can I ask you that?
Yeah, sure.
How did when you look at let's use HubSpot as an example.
Yeah.
How did they do that at the start? Because oftentimes you'll come up with a great idea, you'll see a problem in the marketplace, and that seed of innovation comes from, you're saying, gosh, we're doing this the wrong way, or gosh, wouldn't it be more efficient if we did that? How do you sort of link those two together? Like, what was the process in doing that? Because I think it's not easy to do.
It's not necessarily easy to do. I would argue that it's easier to do early than it is late. And maybe I won't name any names, but today there are literally companies that have gone public with negative gross margins and now are trying to engineer their way toward a business model.
Yeah.
Very difficult when you're already at scale from a, let's say, number of users point of view, and you're already in the limelight. So it's much easier to do early, and it's certainly not that you're going to figure it all out. You're not going to. Your pricing may change a dozen times on the way to ultimately figuring out. But something fundamental. We're going to make a software. We're going to sell it to the customer. The customer that uses the software will pay us. Or maybe from the beginning it's going to be an advertising model, and I'm not going to turn that on for a while. But I know that 3 years from now I intend to turn on the advertising model. I can be engineering in that direction. Yeah. I didn't just say like, product is fun, business is hard. Let me just engineer a product and we'll figure out business later. If I build it, they will come. Yeah. You'll find that you might have built it differently if you knew how you were going to try to get them to come. So I think that it's important to be thinking. It sounds silly, and yet it's sillier still is that we've seen companies not do it. And the second thing I was going to say is, and again, it may sound obvious, but the management teams at both of those companies have what I really think of as a learning mindset. They don't go in thinking they've learned everything they've ever learned. And I don't say that because I've got so much wisdom to impart to them or the other board members. These are guys who know their business very well. But just because the journey is going to reveal things that you don't know today, and you're going to have to course correct a lot. And I would say like Brian Halligan at HubSpot is fantastic. He's certainly fantastic at the horizoning model that we talked about before. I think he walks around with a 5-year, 3-generation horizon model in his head all the time about what's going to be the next thing and what's the thing after that. But he also learns from every quarter. You go into a quarter that you think was just fantastic, and he'll tell you the 3 things he thinks they could have done better. Every customer meeting he's learning from. He seeks out peer companies, partners, customers to learn from. And there's no question that makes them a better company. Mm-hmm. And he's also just learning from the process as they go, and they can course correct. And I think if you go in thinking that you've got it figured out and you're plowing such a unique path that nobody's ever done what we're doing before, and therefore we'll be smarter about what we're doing. It's a tough balance. Tech entrepreneur, you want them to be something of an iconoclast and be somewhat impervious to people telling them that their idea is stupid. Yeah. But at the same time, they've got to learn from their own experience, from what the company sees, and that thing. And I think both of those companies do that very well. So embrace the idea that there are known unknowns. There are known unknowns. Yeah. And I would also suggest there are unknown unknowns. And if you talk to the right people, they'll answer some questions you didn't know to ask. History may not repeat, but it rhymes a bit sometimes. Yeah. Well, let's go in a little bit where you're headed now, because you made the move to the venture capital world here. Yes. But I want to talk about that. But I want to get your perspective on the fundraising and venture capital environment, because you've made a few comments here about companies going public, which implies they've raised a lot of capital without a business model. What do you think is going on in the VC world today? Hey, I've been in the VC world now for 2 weeks, so let's. But you had to have an opinion before you decided to join. I did. Well, look, I think anybody in VC would say there's a great deal of money in VC that's come into VC. It's just objectively clear, and that and it's chasing a lot of business. You can see where valuations are right now, and clearly the private market has driven a lot of that. I think that, honestly, I think the regulatory market, I can say this as somebody who is a public company CFO, it's less fun to be public than it once was, and you can see that in all these companies that are going very long, very late stage and staying private, and the good news is that the private capital markets has become very efficient and very effective, and you can continue to get funded, even where companies in the past may have been really encouraged. I won't say forced, but really encouraged to go public. And it's harder to make course corrections. It's harder to make changes in the public eye than it is in the private. You've got a much more supportive investor base and a much more long-term focused investor base in the private sector than you do in the public. And the public sector is so quarterly focused and so unforgiving that it can be quite a distraction if you're trying to build a business. So I actually think that the ability to raise private funds and stay private longer is actually a good thing, and the influx of money into VC has been part of what's allowed that to happen. We'll see where we've been through a couple of cycles in the last few years regarding the relationship between private company valuations and public company valuations. Public company valuations in recent months have gotten very high. I'm not saying they're overvalued. The economy's done extremely well. There have been changes in the tax laws that mean that literally on a discounted cash flow basis, a lot of these companies are more valuable than they were a year ago. So you've seen those. You've seen the relationship change so that some of the public companies now have even higher multiples than private companies. And if you'd looked back a year or two ago, that would have been the reverse. That's probably healthy for the upcoming IPO market, and it'll be interesting to watch. Like I said, I just got here, so it'll be interesting to see.
What type of companies are you looking to invest?
Yeah, it's interesting. So I got to Lead Edge Capital because I'm on the board of Duo, and that's where we
the connection.
That's where we first worked together, and we will see. To be fair, I'll be an operating partner at Lead Edge and not running investment for Lead Edge. So those guys have a great track record of finding. Usually not seed stage, usually at scaling stage companies that are 10, 20 million in revenue, have figured out the product, know who they're going to sell it to, know how they know what they intend to do, and just need to go do more of it. Need more connections, need more insight into how to scale the business, that stage business. And the company the firm has a pretty good track record in that space. Duo's doing fantastic. As the one company that we have in common going into this. I will be just starting with Fund 4, which is has just closed now, and so it hasn't made its first investment now. So we'll see going forward.
What are some of the things when you look back at your operating career that you think you can bring to these private companies to maybe avoid that going public without a business model, or understanding the inflection points? I mean, are those the type of things that you're looking to expand on?
It's interesting. I think there's a balance, and you need to be careful not to overweight your ability to influence. Certainly, we look to help the companies that we invest in, and I think one of the things that Lead Edge does very well is the majority of the limited partners, the investors in Lead Edge, are ex-operators. They're ex-CEOs, ex-CFOs, ex-heads of marketing or people at different companies that did very well. And Lead Edge does a very good job of leveraging that network to assist the companies in its portfolio. And that's a tactical type of help in many cases. That's helping get into particular sales opportunities, connecting them with the right people as they're staffing up, that type of thing. I think one of the things that VCs can over engineer on is their ability to steer a company. You've got to 90% of the science is in the selection, because nobody wants to be in a company and be, you don't go in expecting that you'll have to ever replace somebody or really enforce a course correction. You're picking teams that you think are winning teams, right? And you're making that selection. I've had this discussion with a few VCs in the past about about spending at some of their companies, some of the kinds of companies we've talked about, where they're trying to figure out their business model, but they do have an open bar on every floor of their 4-floor office, and so that they've figured out. But and someday they'll figure out how to make money. And to me, that's not that's not. I wouldn't look at a board and say like, well, you should have enforced something different there. I would more look at the selection of what was the team that you selected intending to do in the beginning. Building the business, I really would want building the business to be the focus, and then super prepared to help with that. And then from my experience, I think I'm lucky to have been at some pretty big companies, to have been in a lot of scaling exercises at a lot of different stages, whether that's at a startup, at the rapid scaling at NetSuite, and in the sort of 60 million to $1 billion in revenue phase, or even the scaling that was happening at SAP after it was already pretty big but was introducing new technology that was really growing the business there. And so that's some of the stuff I hope to bring. It should be interesting. Yeah.
Which American company started with a guy in a garage, was featured on Shark Tank, and now has over 1 million customers? Hint, they're reducing crime in neighborhoods everywhere. Here's Ring Video Doorbell founder Jamie Siminoff with his secret to success.
It's true. In just a few years, we've had huge growth. We've hired hundreds of people, expanded our warehouse, and we're shipping millions of units a year, all while making sure our customers are happy. I've had lots of things to worry about, but I never worry about our finance and accounting because we use NetSuite from Oracle. From the beginning, NetSuite let me see what's going on with my business in real time, from revenues to expenses, customers and orders, even HR. I run my business from a dashboard right on my phone. NetSuite has been my business management system from 10 to a team of over 1,000, and NetSuite will be my choice as we continue to innovate and grow.
Go to netsuite.com/ring to see how Jamie scaled his business. You'll also get our free guide titled Overcoming Your 5 Obstacles to Growth. That's netsuite.com/ring for your free guide and the story of a great American company. netsuite.com/ring.
All right, so that's a lot of good stuff here, but let's talk about what you're up to now. Sounds like you've got a bunch of stuff going on in between your little, retirement from NetSuite into your newest things.
Yeah, I got a number of fun things going on. I'm doing a startup with a buddy of mine, starting a company up in Japan, which is fun. Oh, wow. And let's see, on the home front, we just completed the design and build of the final version of the robotic finger for cheating at Pokemon Go. And I'm working on that. Yeah. It's a beautiful thing.
Is Pokemon Go still popular among your kids?
It's funny. It's popular at my house, and we have just across the street from our house is a Pokestop. I don't know how. I don't want to go all Pokemon Go on everybody, but there's a Pokestop across the street from our house. You can spin it from inside the foyer of my house.
Do Charmanders show up often?
And so,
that's pretty good. So did you know I knew what a Charmander was?
I think you introduced me to Pokemon Go even before my 11-year-old.
I actually caught when Pokemon Go came out in the office. I was actually.
I know you were catching.
I was doing catch and release.
Yeah. You caught a Zubat right out here. Yeah. Well, we can spin. Evidently, you can spin a Pokestop every 5 minutes and fill your backpack with stuff. And so, since you can do it from inside the house at our house, and you can do it every 5 minutes, we're like, hey, let's have a robot do this. And so we figured made like 5 prototypes of how to build a capacitive touch finger.
Is this just you or do you have kids involved in this?
No, there's a kid. It's an excuse. If you have a kid, that's an excuse for this kind of stuff. So then we built the capacitive touch finger, and then we built a finger that would swipe, and then we realized it needed to swipe and move and click. So we built that, and like prototype 5 now is in production. It spun a couple of nights ago. It spun overnight every 5 minutes until the backpack bursts open with Pokeballs and stuff. It's fantastic.
You actually did this.
We actually did it, yes.
You must have had a lot of time.
My son will produce a YouTube video. Yes, that's the point. That's the point. I have lots of time.
So there's so that's robotic Pokemon Go. I hope that Pokemon people aren't listening to this, by the way, because I'm not sure if that fits the terms of service. But anyway, it's a good time.
Well, you may be. This could be like a mod for Pokemon. Like I think those are legal.
Yes. I think there's. This is another one of those lessons where I'm sure there's a very elegant software solution that would do this as a hack, but this is the hardware solution that just does it the way a human would do it, only with a robot.
Just as an aside, one of the things that might be interesting is, how there's all these YouTubers who go on and they play video games, they record the video games. Our sponsor, Blue Microphones, is one of the biggest suppliers for the recording equipment for gaming YouTube things.
Right.
You could do that.
You could actually produce the robotic finger.
Yeah, and then you could have you or your son, maybe you, if it sounds like it's your jam, like you could sit there and you could literally, you could talk into the microphone, film you with the robotic finger, catching them all. It might happen.
Okay.
Yeah.
I'll tell you the other one that we're working
There's
on.
more.
That's really the father-son project. Okay. I got his son is pretty much, he's software, I'm hardware. We work out the projects that way. But I'm also working on, this is really just for my own private use on the Chinese chicken salad app, which will help me locate the best Chinese chicken salad in an area and then log specific Chinese chicken salads that I've had. That's not going to be a commercial operation. That's just because I really like Chinese chicken salad.
Is that your favorite salad?
The tool sets on the web now, even a finance guy like me can take App-Table and Thunkable, and you can put together a mobile app on your own, and next thing you know, you're tracking your Chinese chicken salads.
What if you grow tired of Chinese chicken salads? What are you going to do then?
I think
I'm worried about.
I'm going to do a V2 that's
Cobb salad,
barbecue sandwiches or something.
How about Cobb salads?
Yeah, I don't know. That would be
the
quite the variation, but yes, a Cobb salad.
So this is a real that you're doing this I can't tell if you're. You're a CFO. You're not
prototype on my phone right now.
You're not supposed to be this joking or teasing. You're really doing this.
Yes. I'm also serious that it would never be a business.
Is it going to be on the App Store?
I'm tired of going into a place and saying, have I had the Chinese chicken salad before here? Is it good or is it terrible? I've got no record.
Yelp's not doing this?
No, I don't trust those people.
There's a big hole in the salad
I've got very specific
Yelp.
Chinese chicken salad. I can't crowdsource this.
We can call the Yelp guys. I'm sure it could be like, hey.
I need just a record of my own Chinese chicken salad evaluations.
Chinese chicken salads are definitely my top 5 of salads. Could I be a contributor to the Chinese chicken salad?
Maybe we would have to check your grading criteria and see if they match up with mine. Mine are pretty specific.
Okay. Well, these other two. Well, see, it sounds like you've been having this entrepreneurial itch here with all of these endeavors that you're up to.
You might call it a creative itch. I'm not sure
itch.
Any of those are.
You never. Don't sell yourself short. I like this. So Lead Edge Capital. So what are you going to be doing for these guys?
So they've just raised, I should start saying we, just raised the 4th fund of this, so relatively young investment firm. So 4th fund, it's $520 million. And they make most of their investments at sort of growth stage, maybe 10 million to 100 million run rate sort of companies. A lot of B2B SaaS in there, some consumer stuff, some platform plays, but mostly B2B SaaS, and so that's where I've spent a lot of my time, and so I'll be on board helping them in the evaluation stage, and then helping once they've made investments, helping to oversee those investments, sitting on some boards. I actually got to know the firm best because I was on the board at Duo. They led the D round at Duo. And so we sort of got to know each other through that one, and I think we'll look for more opportunities like that.
I'm curious, how did you decide to go into the venture world? You spent a long time being an operator.
Yeah.
Right? What was the motivation to?
Yeah,
you're like a coach now instead of being on the field as a player.
Yeah, it's interesting. I think so. I actually think that's part of it. So part of it is just life stage, and I have spent years being an operator and a lot of years. Now being a public company CFO, which can be shock to anybody who's ever done it, can be a bit of a grind. It's a quarterly cycle, and it tends to be a 24/7, really no exaggeration, a 24/7 job, and especially with the last year of NetSuite, we were in acquisition and this kind of thing. So it's it's been a busy time. I've got younger kids, as you might imagine from some of the projects we're doing at home. And so I was really looking to spend some more time with them, travel less, not work weekends, kind of thing. At the same time, I started doing individual investing and really started to enjoy the coaching aspect, as you say. And also just, the problems of earlier stage companies are fun, meaty problems. And they're a lot of fun to deal with. And you get to a running scaled company in a CFO position, and it is, if things are going well, it is a little bit the same thing over and over again. And the challenges of small companies are fun. They're just fun to work with. So I like that aspect of it. And so I'm looking forward to it. Just getting started. We announced last week we've just opened a fund for and just start making our first investments. Yeah,
you're an operating partner.
Literally met 3 companies last week as the very beginning of another couple of meetings.
And you're going to be an operating partner then, right?
Operating partner. Okay. It's a little bit of a unique model at Lead Edge, and sort of the 2 things that are unique about it that really attracted me to it. One is that they raise almost all of their money from individual investors. And so $520 million has been raised from more than 300 individual LPs. There's a little bit of institutional money in there, but most of it's coming from people like you and me, people who've been operators at companies. And then they leverage that network really heavily on behalf of their portfolio companies. They make a lot of connections, not just at we need to make a giant strategic hire level, of course that as well, but really on a day-to-day tactical basis, they're helping out their portfolio companies. Yeah. I really like that. And the other thing is that the operating partner model here is a little different. It's a relatively small firm, 3 partners, I guess I'm now the 4th operating partners. And so a pretty small team. The Monday morning meeting is that team. And then the operating partners, for the most part, are sitting the boards in the portfolio where there are board seats. And so the operating partners are really holistically involved from an evaluation stage to really throughout the sort of running the portfolio part, which I really like.
And you guys invest mostly in the U.S., or do you do anything international?
Mostly in the U.S. Yeah. Certainly, B2B software is far and away, B2B SaaS certainly far and away most developed in the U.S. They've done some investments in past rounds in Chinese consumer tech, and at least 1 or 2 investments I can think of in Europe, but certainly primarily focused in the U.S.
That's great. Yeah. And the firm's based in the Bay Area, then?
The firm's based in New York.
Oh, New York. Oh,
yeah.
Interesting.
It's. I mean, the bulk of the team is in New York. The founder is in Santa Barbara. And
wouldn't we all want to be in Santa Barbara?
Yeah, and then there's a couple of us here, and a couple of operating partners in the Austin, Texas area.
Oh wow!
And
okay.
So we're a little spread out.
Yeah,
it's a lot of phone calls.
That's all right.
Yeah,
it's a virtualized world these days. So as you're just getting started, obviously, into this thing. What are some of the things that you think are going to be the most interesting parts of your new gig?
Well, it is interesting, and it's you would think it's kind of long in the tooth now, but I've talked before about being present at SAP just as the whole client server thing was happening, and then you had this generation of businesses, all the ERP, CRM, everything that was invented on that client server stack after SAP came out with that, and now. When we were in the early days of NetSuite, there were no SaaS companies. You had Salesforce out public a few years before we were, but today SaaS is everywhere, and it really is interesting how the proliferation of SaaS, and specifically public SaaS, has enabled these really sophisticated solutions to emerge that solve really specific business problems. That either have not been solved at all in the past, or have been solved in some really, really suboptimal, disjointed way. And the ease of deployment of SaaS by these companies is really making opportunities for all sorts of new types of solutions to be developed. I'm specifically interested in B2B because probably because I'm a kind of a quantitative guy, and I love it when you can solve a business problem. It's very quantifiable, the impact that solution is having on those
I feel
customers.
like with this Chinese chicken salad and thing, you're expanding.
Got to separate the business from the hobbies.
The hobbies.
You got to know which is which.
Yeah. No, I think it's so you still see a lot of runway then in B2B and looking at areas to automate or use AI or things like that.
Yes, absolutely. In areas to automate, in abilities to connect different systems. People are still figuring that out, I think, a little bit with SaaS. And it's interesting because I think what you're seeing is the size of a problem that can be optimized is getting smaller and smaller. You can efficiently optimize for a smaller and smaller area of the problem set because of the ease of ability of deploying these systems. And there's definitely still challenges with interoperability, and I think there's even opportunities. You see established companies like MuleSoft going for a significant valuation. You see later kind of SaaS companies like Zapier doing extremely well connecting data between these systems. So there's huge opportunities there. But the systems are just going to proliferate, so I think those opportunities will continue as well.
It does feel like there's a lot of opportunity in the niche markets, right, where you can go into an industry that maybe was overlooked and it was just never big enough to warrant, maybe in the old days, a full-on venture investment, but you can actually target now a little bit more precisely. Yeah,
and I think the good thing is now, when we were early in SaaS and we had to figure everything out, everybody, not just us, not just sort of executives at NetSuite, but every board member, every person you hired, every market analyst you talked to, all of them had background in license maintenance, kind of model. Yeah. And it was an education for all of us and a learning experience for all of us to really figure out SaaS. And it doesn't, of course, it's a different business model, but it really affects the whole operating rhythm of the company, how you comp reps, what's the right way to support customers, what's the sales cycle look like. All of it's different in SaaS. And I think, to go from when we were getting ready to IPO in 2007 to today, now every venture capitalist has a dozen SaaS companies in the portfolio. Everybody's been through a cycle or two with a SaaS company, and it's much more familiar. And it's really in the explosion period of growth for these companies.
Well, it's interesting. The body of knowledge exists, right? So that's all there, and you can build upon that, and then all the technology stacks that we would all have to invent a decade ago.
That's right.
Those all exist. So you can...
If an idiot like me can build a Chinese chicken salad app, I mean, you can imagine.
Imagine what
the potential
of real talented programmers. It's amazing what will happen.
Yes.
Well, that's awesome, man.
I imagine there are some more challenging problems to solve than that. I can't think of one.
Well, that we'll have to end on that note. I appreciate you coming in, and congrats on your new role, and look forward to seeing what you invest in. And we'll have to do a follow-up podcast, maybe on the VC thing, but definitely on what's going on with Pokemon Go and your Chinese chicken endeavors.
That's right.
And hopefully it'll end in the App Store maybe one day.
I doubt it.
You doubt it? You doubt it?
Only if people want Ron's evaluation of Chinese chicken salad.
Chinese chicken salad. So hopefully everybody learned a lot today about Chinese chicken salad and how to grow and scale a business. We try and cover a lot of ground here. So, anyways, thanks for coming in, man. I appreciate it. It's good to see you.
Thanks for having me. Yep.
Thanks a lot.
All right, I want to thank Ron Gill for coming on the show and his insight into Chinese chicken salads. I think that'll make the podcast even more tasty than normal. I also want to shout out everyone who made it possible, our sponsors at Second City, Blue Mics, and Ring, plus the editing crew at Lampstand and our producer, Kendall Fisher. Adios, everybody.
You just listened to the Grow Wire podcast with host Jason Maynard. Make sure to tune in every week for another episode full of tips, tools, and strategies to take your personal and professional growth to the next level. Until next time.